listened to a discussion about the architecture for Web3 technologies. It's the founder of Solana and a couple of other people. It doesn't matter who they are, and the names really don't matter. The founder of Solana, founder and CEO, he's an interesting person. He got his degree from the University of Urbana-Champaign, sort of in the late 90s. So he comes from a similar background like Mark Andreessen. So I would say he's a founding member of the internet in the sense that he was part of that crowd that created the browsers and the distributed compute and all those things that today are obviously very important. I think the reason I mentioned this is because I can see why he's so interested in Web3, because this is, if you want Internet 2.0, it's the Internet of identity. It solves certain problems that the Internet cannot solve. And in particular, what it solves is, these are his own words, it can create a real-time state machine for not just financial markets, but almost anything you could think of, any kind of data. And he's very much influenced by financial markets. He says in this interview that he actually traded currencies and did algo trading and all that kind of stuff, and realized how important state machines are. State machine just means that, let's say, if you take the NASDAQ, what is the NASDAQ? The NASDAQ is a real-time state machine for financial assets that are traded on the NASDAQ. Any moment in time, 24 hours, 24/7, 365, you can, you know what the value of, the stock X is if it's traded on NASDAQ. Even after hours, there is a liquid market. You can buy and sell at a certain price. And this is where this particular person comes from. And I find that very interesting because, not just as a hedge fund manager, but also as a person, I was always very interested in financial markets. Actually, the reason I studied economics and focused on finance and global finance was because I was so intrigued by financial markets, by the idea of financial markets. I traveled to Amsterdam and Lombard Street, London, and Exchange Place in Hong Kong, and all these places that, obviously Wall Street, where I lived for a long time and worked. Those were places that signify the importance of global financial markets. And what Solana is trying to do is bring that idea to other areas and therefore make assets out of them. I think this is the fundamental purpose of Solana. It's a little bit different than Bitcoin, a little bit different than Ethereum. And the question I want to ask in this episode is Web3 a problem looking for a solution looking for a problem? In other words, a solution looking for a market? Or is there some real meat around the bone? If you look at the talent that is interested in this space, you might think, well, no, of course this is interesting. You don't have people that have, from professors at Berkeley and Stanford to seasoned entrepreneurs, seasoned executives of large companies. Everybody's investing in this space, time, money, careers. This can't just be a fluke. Well, it can, or it can. I mean, this is up for debate, and this is a longer and broader discussion that I just had within the fund that we had, which is, okay, how do you even value, let's say, if you look at startups, right? How do you think about their future prospects? And the reason I'm asking this question is because you could have companies like Tesla, Amazon, or Nvidia that created trillions of dollars of value, or you can have companies like Uber and Airbnb and Twitter and Instacart and Pinterest and all these other companies that came in sort of what was Web 2.0 and adjacent to that, and they never really created any value. I mean, they have market value and there is something trading on some stock exchange, some stock, and there is some value. Of course, let's say a company like Uber has value, but it's not the kind of value that we, at least at Orange Capital Partners, are interested in, because number one, it makes no money for public investors, which is a whole question mark on its own. But number two, more importantly, it just makes no money, period. And the question then comes up, well, what is actually the value of a business? And how do we measure it? And if we say it makes no money today, is that a good measure? Because it might just make money in the future. How do we think about this? This is and the answer is, of course, we think about this in terms of there's a difference between not making money because your unit costs are higher than what you can make. In other words, you have no economic value added, period. Or you're just reinvesting your cash flows, you're investing for the future, and you're building a Golden Gate Bridge. I'm using I forgot the guy's name. He used to be an analyst at the A16Z. Now he's an analyst in London. And he spoke about Amazon. I thought this episode that he published about 2014-15 was really pivotal in terms of understanding tech businesses, because he said that, Amazon is really building a Golden Gate Bridge. So the question is, in simple terms, which startup is building a Golden Gate Bridge and which startup is just putting water in the sand? That's the big question. Then, of course, adjacent to that, is Web3 just water in the sand, or are they building a Golden Gate Bridge? This is not even our podcast. It's September 6, 2023. This is Krim Telco. Since the last update, we're up about 5%. The market's down 1%. For the year, we're up 118.2%. The market's up 16%. We're outperforming by 102.2%. Let's dive into it. So again, conversation about Web3, the CEO of Solana with other people, some analysts, the podcast I picked up, names don't matter. I'll put it in the show notes. But fundamentally, what's important here is the question, okay, is Web3, is this idea of whatever Web3 represents, is that really a value in terms of like building a Golden Gate Bridge, in terms of we're building a massive infrastructure for the future that will be very profitable and very useful for humanity? And this is already a big assumption here that I think defines what we consider economic value, which is it has to have real value for people. Otherwise, it just has no purpose. There's a lot of businesses out there, a lot of endeavors, a lot of things that really don't have any value, and they're being subsidized indirectly or directly by governments and all that kind of stuff. And that's fine. That's a political question. Let's say nuclear power is such a thing. Stealth bombers are such a thing. I mean, they're great technologies, but they really wouldn't exist if there wasn't political will to support them financially. However, there's other companies like Tesla, Nvidia, and Microsoft, and Apple, and Facebook, and many other companies that exist despite the government, or because the government, but they would exist even if there was no government. In other words, they really add economic value to society. They are able to monetize some knowledge somehow, and do that through what, it goes back to Adam Smith. We should not be interested in the goodwill of the entrepreneur. We should be interested in her greed, because her greed will create something that will make us happier and them richer, and that's how capitalism works. Now, of course, this is an idealized version. For the context of this conversation, I want to first start about Web3. Okay, what is the value of Web3? And I want to use the Solana CEO's argument, which is, okay, the whole idea of Web3 is simply we have a real-time state machine for not just financial assets, but almost any other asset. So this is the idea, right? So we can decide at any point in time what is and what isn't. And by doing that, we're creating assets. This is the great innovation that Web3 offers. So, for example, your updated location, your location where you are right now, is a piece of information that Google, Facebook, and people like that could monetize. But in a Web3 world, you can own that piece of data, and through composition and smart contracts and those sort of things, you could actually monetize it, because there could be a liquid market for that. And if Procter & Gamble wants to know if you're right now in a store, then they can pay for that and then advertise to you on the phone something that you might be able to buy right now because you're in that store. So that's kind of the idea. Now, I don't want to go too deep into all these use cases. The point is, this is the idea, okay? And there's already a big question here, which is always like, well, nobody cares about where you are right now, right? Nobody cares about that. But then the answer for a proponent of, let's say, Web3 is, well, of course nobody cares, because because they don't know that there is information like that, and they, more importantly, they don't know how to monetize that. Or they don't know how that they can pay for this and actually make money with this. And if they can get it for free, they do it. But if they can't get it for free, they're not. There's no real market for this stuff, right? But if there was a liquid market, then there would be something. It could be something tangible. Now, I don't know what the real answer is. I'm of the opinion that Web3, as it is today, is really just a solution looking for a problem. In other words, it's a lot of people, academics and venture capitalists, going around throwing buzzwords at people, but they really don't have a solution that is worthwhile, right? So, for example, one of the use cases of crypto is really for, let's say, migrants that run away from El Salvador and want to immigrate into the United States. I'm just reading a book now, Solito, which is exactly about that. I think it's an autobiography by a young boy that actually uses coyotes to go from El Salvador to the United States. And in that particular episode in that book, you can see how important it is to carry cash with you, right? Let's say you go from El Salvador to Guatemala, then Mexico, and then the United States. You're exposed to corrupt regimes, soldiers, police people, coyotes, criminals. Coyotes are people that help actually, other people get from one border to the other. So kind of like a positive human trafficking, not necessarily negative in the sense that they trade people, slave trade, and all that. They just help people get from A to B. And of course, some of them are nice. Some of them could, just rob you at gunpoint. And what can you do as an immigrant with no rights in a country and stuff like that? So if you have crypto, if you can literally store money in your brain with a code, and that's it, and there's nothing else there. There's no cash, no nothing, no traceability. There's no Western Union charging you lots of money and things like that. Then that's a value add. So this is definitely a solution, and it's a real market. But I guess it's not that big. It's not that interesting. Money laundering is not much. There are these sort of shadow places that Web3 has been very active as we speak, but that also has been, I would say, the negative part of Web3, which is, this is just something for criminals and drug dealers and money launderers and things like that, and that creates scrutiny and makes senators talk bad about it, things like that. Then we have the whole conversation of digital central banking currency, which is a whole different sort of can of worms. Uh, it just seems to me that whatever solution we have that Web3 is really good for, it seems like not that great right now. It's not like again, like if you look at, for example, SpaceX. I always use SpaceX as a fantastic example. Okay, SpaceX is literally building a Golden Gate Bridge from here to Mars, right? Now, there's no market from Earth to Mars right now. So, how do you finance a company like that? And I think Elon Musk is a grandmaster in building long-term value with short-term businesses. What I mean with that is he's able to create a company that literally will fly people to Mars and finance it by incrementally building businesses that are not necessarily related to the Mars business, but have value right now that can be used, the cash flow can be used to reinvest. So he's building a relaunch rocket that can bring large satellites to orbit. Once that is successful, he's building Starlink, which is a massive, massive mesh of satellites in space that is possible because there's relaunch rockets, and also there is communication technology and propulsion technology available for those types of smaller satellites that are nearer to the atmosphere and things like that. And then with Starlink and that money, further financing can be done for other problems that can be solved on the way to Mars. So this is kind of the way Musk is solving the Mars problem. How is he solving the transition to electric vehicle problem? He starts with a luxury Model S, then X, and then goes to mass market, then creates a self-driving car. And we don't know where this thing is going. But if he 20 years ago had started with the idea to build a self-driving luxury electric car, I think he would have had a lot of trouble doing that off the bat because there was no market for this. So I guess I'm using this example to bring the answer to the question, is Web3 really valuable? I think it's valuable in the sense that long term, you could imagine an infrastructure like that being really helpful. But right now, we don't have these short term businesses that can be monetized profitably to reinvest. So the reason we have a discussion about Web3 right now is because there's a lot of money in the VC industry. The reason we have a lot of money in the VC industry, by the way, is not a good reason. It has to do with pension money and all that kind of stuff. The regulations that allow to siphon some money into what's called alternative investments, and Silicon Valley is taking advantage of that. In my opinion, this is not very healthy for Silicon Valley. It's not very healthy for the financial markets in general because venture capital really isn't about capital, and this is a revelation that I just had recently in a conversation with my partner Zovinar. It shouldn't be called venture capital. It should be called venture knowledge or something, because the real value added of venture people is not the capital. Nobody needs capital. Once you have a real solution, okay, I shouldn't say that. You need some capital, but the ability to write checks really doesn't make a venture capitalist. What makes a venture capitalist is to have the ability to see around the corner, to invest in something that will have value in the future, to invest in the future of in the future Golden Gate bridges of whatever vertical we're talking about, and that is again questionable right now with Web3. It seems to me like a solution looking for a problem. Um, you know, just if you listen to people, even the CEO of Solana, which I think is a very interesting person, just interesting as a personality, which by the way is not very common in the crypto world. Most of the people, unfortunately, are crooks, a la Sam Friedman or Trotman or whatever his name is, the FTX person. So there's a lot of really bad people in that space, and this one isn't. I think he's a real person, worked as a hardware engineer in the telecom business, started a few companies, and has software background and all that stuff. So he's really well positioned to build something that could become the sort of real Web3 infrastructure platform for a real-time state machine, a global state machine, for not just financial assets, but any kind of other assets. So I think that in itself has value. It probably has only limited value. It's like the financial markets. I mean, the financial markets are great, but they just have very limited value. If we didn't have the Fed, then the whole financialization of the world wouldn't be happening, and we would have a fairly modest sector, which is called global finance, which would be financing projects, and that's all it does, and so on and so forth. Now, back to Web3 and the value again, we don't see other than money laundering or immigrants, moving money across borders, like those type of things. There just isn't a real use case right now. It might pop up, and sometimes you build it, and then the demand comes. Maybe it's one of those things. I have a feeling it's not a good situation, because here's why. Because I feel like the money that is investing right now in all these projects, in these Web3 projects, comes from venture capital, and venture capital itself is rotten at the core. Uh, I live in Silicon Valley, and it's just my feeling that the financialization of Silicon Valley has uh, brought this sector to a point where Wall Street was maybe 50 years ago, in terms of like the real value added, which is human relationships, knowledge, bridging the gap between what is today and what might be in the future. Like those kinds of things are being put on the back burner, and it's just about capital, money, about numbers, and it's a lot about egos and vanity and all that kind of stuff, which just is human, but shouldn't be happening, but it is happening now. The silver lining is that we believe there is, or like always, there is going to be a new, uh, you know, let's say, whole new breed of venture people. Let's not call them venture capitalists anymore. Let's call them, emergent technology type investors who understand what emerging technologies are. They are bridges for the next golden gate in whatever vertical we're looking at. and that they have the ability to connect science and technology and entrepreneurship in a way that the pioneers of Silicon Valley have done it way back when Intel started, and from Intel, all these other springboards, or spring whatever word is, Intel was a springboard of which helped others launch and then launch this industry of technology entrepreneurs, of technology investors. That is what we need, and we'll get it. We'll get it in, I think, more tangibly. I can see it happening in what I call real world applications, material science, and real world AI. Those are the things where we see real value uh, in the near future, and huge golden gate bridges in terms of, let's say, to take material science. If we can do faster, better performance-driven materials, functional materials, which is going to happen because it's happening in the academic world, and it's only a matter of time until real venture investors take that knowledge and create companies with it. So those are the kinds of things where we think there will be real value added and real golden gate bridges will be built. For Web3, we don't see it just because, again, I think it's a little bit a problem of venture capitalists. It's too early at the wrong time. Money is chasing problems. Money is chasing solutions when it should be the other way around. That's kind of where we are today. It doesn't mean that, again, I guess my point is just to be clear. I think the problem with Web3 is not Web3, it's the investors, it's the venture capital that is throwing money at this, looking for solutions, hoping that this is the next big thing. But the next big thing doesn't happen on demand. Just because XYZ on Sand Hill Road has $2 billion to invest doesn't mean there is the next big thing. The next big thing happens when it's ready, and then it starts grassroots with real entrepreneurs, with real knowledge, with real risk being taken, and then the money follows. And the money should almost always follow sort of through bootstrapping. Maybe there's a little bit of a bridge financing. Sometimes it's even a few billion, but it's not about the money, it's about the time. How much time do you need to get to positive cash flow? And that is, to me, the fundamental question. How much time do you need? Is it 5 years? Is it 10 years? But give me a time frame. Forget the money, forget the ROIs and all of that stuff. Give me the time, and the time cannot be indefinite. You can't tell me, well, we're building a system here which somehow is useful. We'll see how. That's not a good enough answer. The right answer is here's how we're going to do it. We're going to fly from Earth to Mars. It's going to take us 30 years to do this, but within the next 10 years, we're going to be cash flow positive because we're going to have a relaunch business, and we're going to have a Starlink business. And then we're going to go from there. Like that, I'm using SpaceX as an example, but I want to see a business has to be able to give me that kind of timeline, and then I think it's a real business with real value. Everything else is at best you can get lucky, and at worst it's really snakeball. So to summarize the question, what is real business? And should we invest in Web3? Is that a real business, or is it just hype? And the answer is Web3 right now is only hype, and it's not because Web3 is a bad thing. It's a very valuable technology. It's interesting. It's worth spending academic time and entrepreneurial time on it. The problem is that the investors, the venture capitalists, they have too much capital and not enough knowledge. So it's more intelligence and less dollars that we need in Web3. We need more intelligence and less dollars in several other areas, but particularly Web3. And we believe that where the intelligence is happening and there's not enough dollars, which is a good thing, it actually is what we call real-world AI and real-world applications such as material science. That's where we believe the next big wave of venture investing and entrepreneurship will come from, because those areas are being revolutionized as we speak. And as it is with venture capital, actually, venture capital, interestingly enough, is not about capital, it's about knowledge. And Sand Hill Road now is way too much involved with money and not enough knowledge. So we need to change that. It's going to change organically, and we're very positive about this. And, to answer the fundamental question again, Web3 is right now a flush with dollars, but not a flush with intelligence. We need to change it. Thank you.